Well, I have about 3 minutes after 4, so let's go ahead and get started. Welcome to our Young Investor Society Global Online Club meeting. We're going to be going over lesson 1, which is the 7 golden rules of investing. And we are doing, unit 1, lesson 2. And Sarah is our student advisory board instructor today. So Sarah, I'm going to give it to you.
Okay, hi everyone. Today we're going to be learning about what it means to invest in the stock market, and I'm going to share my screen and we're going to start learning. Okay, so today we're going to be doing what does it really mean to invest in the stock market, and an overview of what we're going to be learning about today. We're trying to give you guys a basic understanding of what the stock market is and how it functions, and we also want you to learn what it means to buy a stock and why there are fluctuations in the stock market, and some objectives for today. We want to understand key terms like stock market, etc., and also like identify stock tickers of popular brands and make an argument for investing. And lastly, we also want to understand how stock tickers work and where to find ticker listings. So let's begin. We're going to watch this video. Is my audio sharing? Okay, let me know if you guys can't hear this video.
What is the stock market? Presented by WallStreetSurvivor.com. This is Jimmy. Jimmy is from Miami. Jimmy is a baseball fan and has a huge baseball card collection. Jimmy, the smart boy that he is, realizes that his card collection is very valuable, especially since his Derek Jeter card has skyrocketed in value. Jimmy wants to sell his cards to buy a new skateboard. Jimmy figures his best bet is to set up shop at the local flea market, which is a place where buyers and sellers meet to exchange goods. Buyers try to negotiate with sellers to get the best possible price, but often buyers and sellers meet somewhere in the middle. Mike, a huge sports fan, spots the Jeter card and asks little Jimmy what the price is. Jimmy responds that it's $100, and Mike says that he will give him $80. Jimmy suggests they meet in the middle and settle on $90. Mike agrees, and the transaction happens with both parties satisfied. A flea market is a lot like the stock market, but instead of people selling products like baseball cards and pottery, the stock market allows owners to sell their shares of companies for cash. The price of the shares depends on supply and demand. How many people want to buy that stock versus how many people want to sell it. Often, just like in the flea market, buyers and sellers meet in the middle. Say, for example, you own 100 shares of Apple. It is trading at $300 and you're willing to sell it for $305. You call up your stockbroker and tell him to place the order. The broker won't sell the shares until a buyer is willing to meet the asking price of $305. He calls his contact who works on the NASDAQ trading floor in New York City. Every company on the NASDAQ has a stand where they are selling shares of their stocks. Buyers come to the stand and post their bid, which is the price they are willing to pay. If there are no buyers at that price, the seller can drop the price or the buyer can increase their bid. The stock market is made up of transactions like these, which happen millions of times a day in thousands of publicly traded companies. Today, most of these transactions happen electronically, but the concept is still the same. Just like Mike bought the Derek Jeter card from Jimmy at the flea market, you can buy stocks from publicly traded companies on the stock market. Are you interested in buying stocks? You can learn how risk-free on WallStreetSurvivor.com.
Okay. So what are stocks? Here's another video to help you guys.
Stocks Made Easy, presented by WallStreetSurvivor.com. This is Julie. She lives in Paris. Julie is known for her delicious croissants. She started baking when she was a little girl, and ever since it has been her dream to open a bakery of her very own and supply the city with her wonderful croissants. She figures that it will cost her $100,000 to start her business with all of the supplies, staff, and costs of starting a business. The problem is Julie only has $10,000 to put into her company. She definitely can't build her business properly on $10,000. What is Julie to do? Julie does issue stock to investors to help raise money. Stocks are pieces or shares of ownership of a company. Each share is worth a certain amount based on what the company is worth. Companies issue shares to investors in order to raise money. Because she is $90,000 short, Julie decides to get 9 of her friends to invest in the remaining balance. However, to do this, Julie must give up 90% of her company in shares. Now, Julie and her friends each own 10% of her company. 5 years later, Julie's bakery is booming. She has turned her bakery into one of the biggest in Paris. Her company is now worth $1 million. Julie got the money she needed to create her business without acquiring additional risk or debt. Also, Julie and her 9 friends each turned their $10,000 investment into $100,000. Just like Julie's friends bought shares in her company, you can also buy shares of publicly traded companies like Apple or Walmart. If Apple has 100 shares and you bought 1 share, you would own 1% of Apple. To learn more about the stock market, sign up at WallStreetSurvivor.com and play the web's biggest fantasy stock market simulator.
So now we're gonna discuss some questions. So does anyone want to share what a stock is? Okay. Okay, so a stock is kind of basically like a portion of a company that you can own, and you can do this by buying publicly traded stocks. So once you buy a share of a stock, you just own a percentage of that company, depending on how many shares they have in total. And does anyone want to take a stab at why the stock market goes up and down?
Because of supply and demand.
Yes, that is basically a really good representation of why it fluctuates. When there's a higher demand, the supply is usually lower, or when there's like a lower supply, there's a higher demand. When there's a higher supply, there's a lower demand. Also, price in relation to demand. So each publicly traded company is identified by a stock ticker, and these are usually like 2 to 4 letters that are abbreviations of a company's name, usually that really identify the company on the stock market. For example, we have Apple's stock ticker, which is AAPL, which is kind of like Apple. And now we're going to work on handout 1.2 and stock tickers. And here are some new vocab words. like shareholder, stock ticker, stock market, stock, and capital. Okay, so we're gonna watch another video of kind of what it means to invest in the stock market.
Greetings, young investors. In this lesson, we're going to learn about what it means to invest in the stock market. We have a couple of objectives in this lesson. We'll understand key terms such as stock, stock market, what those mean. We'll identify companies and we'll identify what a stock ticker means in that company. And we'll identify how to find ticker listings and how to go about looking for stocks. Okay, so let's begin. First off, we're gonna watch a video, but before we watch a video, I'd like to talk about what it means to invest in the stock market. My first stock that I invested in, I was in college, and I invested in a company called Delta Airlines, and I'm sure many of you have heard about it. It was an airline, and I saw that this stock, I saw that the number had gone down, I think it was $50 a share, had gone down to $10 a share, and I thought, it's down by 80%, and if it goes back up to $50 a share, then all of the money that I put into it is going to go up by 5 times, and I'm going to make a lot of money. So what did I do? I invested in Delta Airlines. What happened to Delta Airlines was that airlines, as it turns out, and as I learned, airlines are really difficult businesses. You have to buy a lot of planes, and it costs a lot of money, and you have to load up on debt. And then oil prices went high, and then they all of a sudden couldn't make their costs and weren't profitable on the airlines. And Delta Airlines ended up going bankrupt. And when a company goes bankrupt, the equity that you invest in goes to zero. And my $10 a share that I thought was a bargain actually went to zero. And what did I learn? I learned that when you invest in a stock, you're actually investing in a company, and that your investment in that stock depends on how well the company does. And so we're going to watch 2 videos now about what is a stock and what is the stock market.
What is the stock market? Presented by WallStreetSurvivor.com. This is Jimmy. Jimmy is from Miami. Jimmy is a baseball fan and has a huge baseball card collection. Jimmy, the smart boy that he is, realizes that his card collection is very valuable, especially since this Derek Jeter card has skyrocketed in value.
Okay, we've already seen parts of this video, so I'm going to skip ahead to after the 2 videos that we've already watched.
Apple. To learn more about the stock market, sign up at WallStreetSurvivor.com and play the web's biggest fantasy stock market simulator.
Okay, I hope that you enjoyed those videos. So the questions that we can discuss is, what is a stock, and why does the stock market go up and down? So a stock, as we learned, is a percentage ownership in a business. And so the more stocks you have outstanding, the smaller percentage that stock is of the ownership of a business. But every time you buy a stock, you are actually an owner of that business, and that stock will go up and down depending on how that company does. And so why do stocks go up and down? And we learned about that in the video about the stock market, is that it is a marketplace, just like any marketplace, with a bunch of buyers and a bunch of sellers. And sometimes the sellers aren't buying and the stock's going down and the buyers really want to sell. And sometimes the sellers don't really want to sell, but the buyers really want to buy the stock, and then the price for that good goes up. And so the stock market is a marketplace where all buyers and sellers come together, and every day they agree on the price that they want to buy and sell the stock. So I hope that makes sense. So the next question is, and we'll do an activity here, is what is a stock ticker? A stock ticker is either a 2, 3, or 4 digit letter sequence that identifies the company, the stock, if it's in the United States. Other markets would have stock tickers that are numbers, but this is the company identifier that will identify the stock that's connected with the company. So for example, Apple is a famous company, and you can buy Apple in the US markets at AAPL is the ticker. Okay, so let's do a learning activity. If you can click on handout 1.2, and you'll go through and identify, we'll give you a list of brands that you know, and then your job is to then identify what company is this and what is the ticker if I wanted to invest in this brand.
Okay, so we're gonna take some time to work on handout 1.2.
Sarah, do you have handout 1.2? Because I have it if you don't.
Yeah, I think I do. Okay.
Did you want to go over the answers?
Yeah, sure. Is it in the video? Okay, so we're going to go over some parts of handout 1.2.
All right, so how did you do on the activity? Let's go over the answers. The first question is ESPN, one of my favorite channels to watch. So ESPN is owned by Disney. And Disney, as we know, has theme parks and many other businesses, but one of their most valuable businesses and profitable is their ownership of the network ESPN. What is Disney's ticker? It's DIS. So if you want to invest in ESPN, go to DIS. Okay, next question. Pampers. I have young kids, and so Pampers diapers are something that we see in our house all over the place. Who owns Pampers? It's owned by a company called Procter & Gamble. Procter & Gamble was a company that was invested in Warren Buffett for years and years. Procter & Gamble's ticker is PG. Next one, YouTube. Who owns YouTube? Did you know that it's owned by Google? And Google, or Alphabet as it's known now, is ticker GOOG. The next one is Sprite. Who owns Sprite? It's owned by the Coca-Cola Company. And Coca-Cola's ticker is KO. And for the next ones, what about you? What brands did you write in there? What products is one that you can't live without? And what is the name and the ticker of that company? And why do you think it's a good investment? So answers can vary. It could be Netflix, and you can look up the ticker of Netflix. It can be Apple, or it can be a part of a company. So let's say you believe electric vehicles are the future, but you don't necessarily want to buy Tesla. So how would you invest in that theme? You could invest in batteries, the batteries that you need to put in electric vehicles. And let's say the batteries need lithium, and lithium is a commodity. Who is the largest maker of lithium? And you can go find a company in Chile called SQM. And so this is a way that SQM, which is a maker of lithium in Chile, is actually benefiting from people buying Teslas in the UK or the US. And so when you find a theme that you want to invest in, you can explore the whole supply chain of ways to invest in that theme. Okay, so we learned some new vocabulary words today that we want to go over. The first is shareholder. A shareholder is an owner of a share or an owner of a business. And so anyone that buys any stock is a shareholder in that company, and you have the rights as an owner of that business to vote, to receive dividends. Dividends are the cash that the company pays to its shareholders every year. The second term is stock ticker. So stock ticker is like AAPL for Apple. It's the ticker that indicates what stock you're buying. The third one is the stock market. And just like any market in the world, this is a collection of buyers and sellers, sometimes rational, sometimes irrational, which may give you your buying or selling opportunity. Next is a stock. And the stock is a percentage ownership in that business. And then the next one is capital. And capital is the amount of money that you raise when you take your company public or do an IPO. And capital is the amount of cash that the company has. And so I hope you'll be prepared for next lesson, where we're going to learn about the super investors of Graham and Donsville. So if you'll take handout 1.3 and prepare for next class, and here you'll read about Warren Buffett, the greatest investor of all time, and you'll learn about what he makes is the argument of how you can beat the market and how value investing compares to the efficient market theory. I hope this lesson helped, and I hope you understand a little bit more about what is a stock, what is the stock market, and how you can go about finding ways to invest in the companies and brands that you love and believe in. Thanks so much. All right, I hope you enjoyed that lesson. So let's take some common questions that we receive after we teach that lesson. The first common question is, how do I know, can I know, who are the other shareholders of that company? If I buy a share, can I know who the other shareholders of the company are? It's a great question, and you can know the shareholders, and actually it's in your best interest to find out who are the other owners of the company. If I want to buy a local business at my local candy store, I would really want to know who is selling it to me and who is the other owner of the other half of that candy store. So where do I go to find out? There's a couple of resources. Yahoo Finance is a way that you can find out the shareholders of a company. Also Morningstar.com, Zacks.com, any of the investment finance portals, you should be able to see who are the other owners of the company and how much do they own. Generally, companies have board of directors, and there's, let's say 10 board of directors within the company. And so if you own 10% of a company, 1/10, you would have the right to nominate one board of directors. And so it's good to know who's the owners, how they're appointing board of directors, because these are the board of directors that are going to hire the CEO, decide on the strategy of that company. So that's a great question. You should know who the other shareholders, especially the big shareholders, are of a company. Okay, the next question we got is, how do we calculate the capital of a company? So it's a great question. The capital of the company is another another word for the capital of the company is the equity of the company. And so you can go on Yahoo Finance or a financial website and look up shareholders' equity or equity. And here you will see the number of shareholders' equity, whether it's $1 million or $100 million. And that's the amount that the company raised in the IPO. And it's also the amount of capital that they've added to that equity every year. So I hope that answers the question. When we refer to capital, you can find that in the balance sheet as the shareholders' equity. Great questions. Keep investing, learners. This is James Fletcher from Young Investor Society.
Okay. Does anyone want to share an idea they had for investing or? Okay. We can do the quiz together for this lesson. You guys can just like shout out the answer and I'll put it in. So the first question is, what is a stock?
An ownership share in a company.
Okay, that's the right answer. And what is the stock market?
A place where people come together to buy and sell shares of a company.
Okay. What is a good reason for listing a company on the stock market or like holding an initial public offering or IPO? Just a reminder, an IPO is basically when a company issues its stock publicly, so anyone can basically buy a share of their business. Okay, we can go over these answers together. The first answer is to raise money to invest in the company's business. And this seems like it would be a right answer since holding an IPO, you can raise more money to like reinvest in the business. And the second answer, US regulations require that when a company reaches a certain number of owners, it must hold an IPO. And this answer is also true because once a company gets really large, it has to go public and offer its shares to the people. And the third answer, to reward company management with shares in the company as a form of payment. And this answer would also be correct because once you hold an IPO, you raise a lot of capital, hopefully, and the company management is hopefully able to benefit from that capital in the form of payment. So the right answer would be all of the above in this case. Okay, is it possible to get a deal in the stock market? Would anyone like to try? Okay, We can go through the answers together, and the first one says yes, because people are buying and selling, and people sometimes make emotional decisions. This answer seems like it would make sense because like a stock price doesn't always reflect its value. So you could get a deal if you maybe buy a stock for less than what it's actually worth. The second answer says yes, because sometimes you're able to have access to inside information that others don't know. And that is illegal. So I don't think that's the answer. The third answer is no, because the market is computerized and the price always reflects the latest market value. I would say that this answer is also probably not the answer, because although the market is computerized and the price does reflect market value, it doesn't mean that you can't get a deal in the stock market, because just because it's the market value doesn't mean that that's what it's actually valued at, or like its intrinsic value. So we're going to see if this is the answer. Okay, and here's our next question. You want to invest in Apple stock. What ticker would you input into your brokerage account? Would anyone like to answer this question?
AAPL.
Okay, it's taking a little bit to load, but we are doing well so far. Okay, I guess this is the end of the quiz. So we can do some like the wrap up activity for this lesson, and basically we want to define the 5 new vocab words that we learned in this lesson, and the 5 words were shareholder, stock ticker, stock market, stock, and capital. So if you guys could, you know, either look them up online or use a dictionary, define those words, and also write a sentence or a couple using these different new words.
Hey, Sarah. I almost forgot. We didn't do idea of the week. Did you want to maybe wrap up with that?
Idea of the week.
Yeah. So idea of the week we usually start with, and it's something that someone has identified within the last couple of weeks in the stock market, or a stock that has done something interesting or anything like that.
Okay, yeah, sure. Maybe we can give them like 5 more minutes to just finish up on your definitions, and then we can share if you guys have any interesting things that you guys have seen recently in the stock market.
Is everyone done?
I am.
Perfect.
Is everyone else done also? Because we can start sharing our ideas now, or we can wait also if you guys aren't done yet. Okay, so does anyone want to share anything interesting they've seen in the stock market, or anything they want to share? Does anyone have anything to share? Okay, I can start with something actually. I don't know if you guys are like familiar with the company Nikola, that have, or their like whole idea was to do like, I guess like hydrogen, like fuel cell like commercial trucks. And recently there was like a report published by a company called Hindenburg Research, and they basically found out that I think there's like some fraud allegations against the company Nikola now, because I think that like they claim to have more, I guess like technology than they actually did. So they claimed that they had like this advanced like fuel cell technology and like batteries, but I guess the company that brought the allegations against them found otherwise. And also I think that they found that like one of their like commercials, or like things that were supposed to be in one of their like trucks or something, it's like a video, and it wasn't a video of the actual truck. I think they found out that they like pushed the truck like down a hill or something, so it looked like it was like going, but it actually was not. It was just gravity probably. And Nikola has come out and claimed that those claims are like untrue and there's like no basis, but you know, things are still, you know, under investigation. I think the Justice Department and the Securities and Exchange Commission recently also like are starting to look into it. And the CEO, Trevor Milton, I think stepped down after tweeting like, you know, these allegations are false and we're gonna prove them wrong. But they haven't really offered anything that's been like very like solid evidence that there hasn't been any wrongdoing, but we don't really know yet. And also I think Nikola, prior to like the research report coming out, they were doing a deal with GM, General Motors, and so the stock I think went up after that, but then the report was published. Now it's like the stock is kind of tumbling a little.
Yeah, super interesting when stuff like that happens to a publicly traded company. I saw that report and video, and I don't know. I'm not convinced that they didn't do anything wrong. So we'll see what happens. The video did show that truck moving, but allegedly they don't have the technology to put in that size vehicle to make that happen. So we shall see what happens with them. But great job today, Sarah. Thank you so much for being our student instructor. And I just have a couple of questions for some of the students who are with us today. Grace Burton. Grace, can you tell me what school you're from?
I go to Central Piedmont Community College. I'm dual enrolled.
Perfect. And Jasper, correct me if I'm wrong, but you're over at Renaissance College in Hong Kong, correct?
Yep.
Excellent. Thanks for joining us.
Yeah, I had to wake up a little earlier today, but yeah, I just wanted to join.
Yeah, thank you. Thanks for, did you have anything to share with us today, Jasper?
No, not really.
Not really. Okay, no worries. No worries. All right, Sarah. So again, thank you so much for hosting our YIS Global Online Club this week. It was a pleasure to see all of you guys. And until next week. Bye, guys.
Bye.
Bye.